Okay, check the answer to homework question. In TDS, question 1 was homework. In question 1, what was given? Examine the applicability of the provisions of TDS under section 194 DA. In this question is specially dedicated to 194 DA. What is 194 DA? When you receive life insurance amount on maturity in case of a big premium policy, then TDS is applicable under 194 DA. So in short, the applicability depends upon if you received life insurance amount on maturity on account of big premium, then only applicable. Otherwise, you will say it's not applicable. So in every point, you will check whether amount is received on maturity, and if on maturity, it should be big premium policy. So check first point. In first point, Mr. Singh, a resident, is due to receive 4.5 lakhs on 31st March 26 towards maturity. Once you see the word maturity means there are chances of TDS. Because if you receive on death, TDS doesn't apply. Even on maturity, if it is a small premium policy, TDS doesn't apply. So now we have to check whether this is small premium or big premium. But that depends upon what? Date of policy, when you have taken the policy. Tell me here, when did you take the policy? Policy was taken on 1st April 23. And what is the rule for policy taken on or after 1/4/23? Either if the premium exceeds 10% of the sum assured or more than 5 lakhs. Any of the amount it exceeds, it will be big premium policy. So first let me check, is the premium exceeding 5 lakhs per annum? What is the premium paid by us? 1,25,000. So in terms of amount of rupees 5 lakhs, it's not crossing 5 lakhs. But there is one more criteria. Either the premium should exceed 5 lakhs or 10% of sum assured. So I will calculate 10% of sum assured. Sum assured is given as 4 lakhs. 10% comes to 40,000. And if you see, our annual premium is greater than 10% of sum assured, that means it's a big premium policy. And big premium policy means TDS will be applicable. But then again you have to check, only if the insurance company pays greater than or equal to 1 lakh, TDS will apply. Here there is a threshold, only when insurance company gives greater than or equal to 1 lakh. So here how much insurance company is going to give? 4.5 lakhs, which is going to be greater than or equal to 1 lakh. So TDS will apply. But TDS will apply on not full amount paid by the insurance company, it will apply on the profit element. What is the profit element made by the policy holder? He is going to receive 4.5 lakhs, but how much premium he has paid? He is paying premium since 23-24. So 23-24 he paid the premium, 24-25 he paid the premium, 25-26 also he paid the premium. After that the policy is maturing. You can see the maturity date is 31st March 26. So you paid premium 3 years. So in 3 years how much premium you paid? 1.25, 1.25, 1.25. So what is the total premium paid by him? 3.75, and compared to 3.75 he is getting 4.5. So what is his profit element? 75,000, and on 75,000 insurance company will cut 20%. Sorry, 2% of 75,000. Anyways, that detailed calculation is not expected in the exam. The question is saying what? Whether TDS is applicable or not. So applicability, only one thing you have to check, if it is a big premium policy and if it crosses the threshold limit of 1 lakh or more, TDS is applicable. Calculation is not asked in the question. It is just an extra discussion I am doing. Then second point, Mr. Roy is due to receive 3.25 lakhs on 31st March 26 on LIC policy taken on 31st March 18. So tell me, here again we will check whether it is big premium or small premium. See, nothing is given means you are going to receive the amount on maturity. On maturity, only if it is a big premium policy, TDS will apply. And big premium depends upon the date of the policy. Here, what is the date of the policy? 31st March 2018. And as per our rule, if the policy is between 1/4/13 to 1/4/23, what was the rule? For normal people, 10% of sum assured. For handicap and diseased people, 15%. Here he is a normal person, so we will check according to 10% of sum assured. Here rule of 5 lakhs will not apply because policies not on or after 1/4/23, na? So here you will simply check 10% of sum assured. So what is 10% of sum assured? Sum assured is 3 lakhs. 10% comes to 30,000. And compared to 30,000, your annual premium is 30,100. So again, here the premium is big. So it's a big premium policy. TDS will apply, provided insurance company is going to give you 1 lakh or more. See, there is a threshold of 1 lakh or more over here. Huh? So here insurance company is about to give you 3.25 lakhs. It's greater than equal to 1 lakh. So TDS will apply. Then third point, Mr. Zach, a resident is due to receive 95,000 on 1st August 25 towards maturity proceeds. Again, I want to check whether it's a big premium policy or not. That depends upon the date of the policy. Your policy is taken on 1/8/2018. So again, the criteria will be 10% of sum assured. So what is the sum assured? 90,000. 10% comes to 9,000. And compared to 9,000, how much premium you are actually paying? You are paying 10,000. So premium paid is more than 10% of sum assured. So again, it's a big premium policy. So big premium policy, TDS will apply, but check the threshold also. Only when insurance company is about to give you 1 lakh or more, then TDS applies. Here insurance company is going to give you 95,000. So when insurance company is about to give you less than 1 lakh, TDS doesn't apply, even though it's a big premium policy. So what was the special point in point 3? Although it's a big premium policy, how did I check big premium? I compared 10% of sum assured with the actual premium. Our actual premium was greater. So it was a big premium policy. But still my answer is TDS not applicable. Because 194 DA TDS applies only when the insurance company is going to give you greater than equal to 1 lakh. Here it was less than 1 lakh, so TDS will not apply. So this was question number 1. Then question number 2. In this question, Romit, a salaried individual pays rent. See, whenever rent is paid by small individual HUF, immediately which section should strike you? 194 IB. And the moment you see salaried person, immediately it should come to your mind small individual HUF. What do you mean by small individual HUF? People who don't have the business, or if they have the business, their turnover in the preceding year does not exceed 1 crore, or in case of professional does not exceed 50 lakhs. But here he is not a businessman only, so he is a small individual HUF. And small individual HUF paying rent of more than 50,000. In case of immovable property, TDS under 194 IB applies. See, here immovable property is not mentioned, but generally rent means you can assume immovable property. But see, here the question is something else. I was just making a general discussion. See what is given in the question. He is paying rent of 70,000 per month to Rajiv from June 25. So you are paying rent from June 25. Is he required to deduct tax at source? So answer is yes. Under which section? 194 IB, because the rent is more than 50,000 per month. And why IB? Because the payer is small individual HUF. Then when is he required to deduct the tax? And when is he required to deposit? Means when to deduct, when to deposit. Two questions they are asking. When to deduct, when to deposit. So when to deduct, although we pay rent month to month, but TDS deduction is done month to month or only once in a year. Only once in a year, that is at the end of the year. The end of the year is March. So in the month of March, TDS will be deducted. So answer is, when is he required to deduct TDS? In the month of March. And when is he required to deposit? By 30th April. And what is the amount of TDS? 70,000 rent is per month into how many months? 10 months. Because you started paying rent from June. Na? April and May you didn't pay the rent. You started paying from June. Did you see the month June? So from June onwards you are going to pay rent of 10 months. So 10 months rent comes to 7 lakhs. And 7 lakhs 2% TDS comes to 14,000. Okay. So 14,000 will be the amount of TDS. So this is the answer to this question. Compute the amount of TDS 14,000. Then what would be your answer if Rajiv does not provide PAN? See, what is the rule? If the other party does not give his PAN, we are entitled to deduct TDS at 20%. So tell me, according to 20%, what will be the TDS? Rent of 10 months is 7 lakhs and 20% TDS comes to 1,40,000. So actually the TDS comes to 1,40,000, but it will be restricted to the amount of rent, because TDS you are going to cut from the rent of March month, and if rent of March month itself is 70,000, so 70,000 can be cut up to 70 only. So although the actual TDS comes to 1,40,000, but it will be restricted to 70,000. Then what would be your answer if Romit vacated the premises in the month of November and PAN was furnished? Now they are saying assume PAN was furnished, but the property was vacated in the middle of the year, somewhere in November 25. So if property vacated in November, TDS is to be deducted in the month of November. And in the month of November, if you deduct TDS, what will be the amount? From June to November, how many months rent is there? June, July, August, September, October, November, 6 months rent. Now it will not be 10 months rent, it will be 6 months, because you are vacating the property on 30th November. So you will pay rent till November. So from June to November, the rent is 6 months. So 70,000 is per month rent. Multiply by 6 months, that comes to how much? 4,20,000. And the percentage of TDS will be 2% because PAN is furnished. So that comes to how much? 8,400. But this will be deducted in the month of November and deposited by 30th December. You know, under 190 for IB, rule of 7th of next month doesn't apply. It's always by 30th of next month. So if property vacated in November, TDS will be deposited by 30th December. All these points I discussed. The question is just a way to recap all the points. So this was question 2, and then question 3 was also homework. In question 3, they have tested knowledge of interest under section 201(1)(a). You know what is the rule for interest? For late deduction 1%, for late deposit 1.5%. So see here what is the case. Kellogg's Limited paid 70,000 to Ankush on 16th July towards professional service. Tax was deducted on the same on 22nd October. Here only you should find the problem. See, when you are making the payment to the party on 16th July, so when should you deduct TDS? See, what is the rule for deducting TDS? Party's account credited, actual payment which is earlier. Here party's account credited date is not available, so ignore it. Just go by actual payment date. See, I want both the dates, party's account credited, actual payment which is earlier. But if party's account credited date is not available, then you have to manage with payment date. So what is the actual payment date? 16 July. So on this date, you should have created TDS liability. But when did you deduct TDS? 22nd October. See, it is given TDS was deducted on 22nd October. Means in your books, you created TDS liability on 22nd October. So, how much is the delay in deduction? See, what is the rule for late deduction? Date when it was deductible up to the date when deducted. When it was deductible, 16 July. And when it was deducted, 22nd October. So, from July to October, part of the month, full month. So, July, August, September, October. 4 months delay in deduction. And then, if you are deducted on the month of October, when should you deposit? October TDS you have to deposit by 7th November. But he deposited when? On 3rd Jan. So there is late deposit also. But in late deposit, how do you count the period? Date when deducted up to the date when deposited. So date when deducted is October till Jan. But October you will not count double. You already counted October. You will count from November, December, Jan, 3 months. Only 3 months interest will come in late deposit. So see here, 4 months in late deduction, 3 months in late deposit. And have you seen that October month I have not repeated in the late deposit calculation. Okay. Same example I discussed in the class. A similar example is also given in the study material. You know the controversy of October. October, as per law, it's getting double counted, but you will not have to pay double interest for October. See that period rule you remember, for late deduction, it's date when it was deductible up to the date when deducted. And for 1.5%, date when deducted up to the date when deposited. Then, what else was there in homework? Question number 6. In question 6, there were many points in homework. This will consume a lot of time now. Look. See, firstly in question 6, I didn't give question point number 1 as homework. Point 2 and 3 are already done. So your homework starts from point number 4. In question 6, your homework starts from point number 4. See, in point number 4, what is given? Mr. Rajat, 79 years old, retired resident individual, maintains savings bank account, FD account with ABC Bank, Delhi. He provides following details to ABC Bank in respect of financial year. Interest on savings account, pension received in savings account, interest from FD account. So tell me, he has got what income? Interest and pension income. And then what they are writing? He does not have any other income. So tell me, all this is a clue for section 194P. How do you get the hint of 194P? Whenever you see a person aged 75 years or more receiving pension and no other income except interest income from the same bank where he is getting the pension. So this has clearly created an atmosphere of 194P. And then they are saying, assume he has shifted out of default regime. You know what is default regime? New regime is called default regime. And he has shifted out. Means he has shifted out of new regime. Means he is going as per old regime. Tell me what you have to do in the question. See, this is a sub point. Main question is question number 6. See, question number 6, how the title is. Look. This thing is common in all the points. See, question 6 is a big jumbo question. And in question 6, this is asked in common. But inside question 6, there are several points. I guess there are 18 points in this question. But see what is asked in the question. Read question 6. In respect of following independent case scenario, you are required to discuss the provision of TDS or TCS and amount of TDS also. Means in every point of question 6, you have to decide whether TDS will apply or not and also calculate the amount. So here also in question number 4, you have to first decide TDS will apply or not, and if yes, calculate the amount also. See, this was commonly said in question 6 at the top. So tell me first here, TDS will apply or not? Answer will be yes under 194P. But your answer should not be just one liner. You have to write, since the assessee is a senior citizen aged 75 years or more and he has got pension income and no other income except the interest income, TDS under 194P will apply. So this you have to write, and then you have to calculate the TDS also. Tell me under 194P, what is the amount of TDS? According to slab rates. And you know this TDS bank will deduct, and bank will consider all his incomes. All means he should not have any other income except pension, but he may have interest income. Na? So when bank deducts TDS, they will consider pension and his interest income, and they will deduct as per the slab rates. So tell me how the TDS will be calculated. You know, under 194B, literally bank will do his full computation. Because 194B will later on exempt that senior citizen from filing of return. So when you are exempted from filing the return, your full-fledged tax will be calculated by the bank and deducted at source. So here the tax calculation of TDS will be full-fledged. Means literally full computation you have to do. Means imagine 5 heads of income. Income from salary, pension will come. Income from house property, nothing. Business, nothing. Capital gains, nothing. Income from other source, interest income. Means what I am trying to say, under 194P, bank will do literally full-fledged computation. So see, I have shown the full-fledged computation here. Look. First, under the head income from salary, pension will come. And once anything comes under the head income from salary, there is a standard deduction by default. This doesn't strike to a student generally. See, how will this point strike to you? The moment you compute income under the head salary, standard deduction should come to your mind. And you know what is the standard deduction? Under old regime, 50,000. Under new regime, it is 75,000. You know, in one lecture, I had explained 115 BAC new regime. That time I told you standard deduction is 75,000 under new regime. But here it is old regime, so 50,000 standard deduction. Okay. Then income from other sources, he has got two incomes. Savings bank interest and FD interest. So savings bank is 75,100, FD interest 1,20,000. So this is the interest income. So what is the gross total income? 8,05,100. And then there is one section 80 TTB for senior citizen. If a senior citizen has got bank or post office interest, repeat, bank or post office interest, he gets deduction of 50,000. This is a fixed rule. Huh? Don't worry. Right now I was not expecting this knowledge from you, but soon we are going to do chapter 6A. In chapter 6A, we'll study one section 80 TTB. This was there even in CA Inter. But anyways, I am not assuming anything of your CA Inter. We are going to specially do the topic of chapter 6A. And there under 80 TTB, there is a deduction of 50,000 for senior citizen. You know, for non-senior citizen, there is 80 TTA. But that is only on savings account. But for senior citizen, it can be any account. Any account. And section for senior citizen, 80 TTB. At this section now only, look, TTA, TTB. Under TTA, it's for junior citizen. TTB, senior. TTA, savings account. TTB, any account. TTA, 10,000 deduction. TTB, 50,000. Here it is TTB because senior citizen and the amount is 50,000. 50 means you have to check the income also. Your interest income is 195,100. So up to 50,000 you can subtract. Means if my interest income would have been only 35,000, then subtract only 35. If you include only 35, you will subtract 35, na? But here we have included 195,100. So you can get deduction up to 50,000. You know, literally when banks calculate TDS under 194P, they make full-fledged computation. Although the title of the section is TDS on pension, but TDS is not restricted to pension. It is on the entire computation. Because later on 194P is exempting the assessee from filing of return. So his full-fledged calculation should be done by the bank. See, all this working bank is going to do on behalf of the senior citizen. So tell me, after chapter 6 your income is 755,100. And then after you calculate NTI, you know the rule, Satak, Latak, winnings, balance. So here there is nothing like Satak, Latak, winnings. So everything goes in balance. And on balance it is slab rates. And you know, I have applied the slab rate of a senior citizen. See, under new regime, junior citizen, senior citizen, there is a common slab of 4 lakhs. 0 to 4, 4 to 8 and so on. It's common for junior, senior, everyone. But under old regime, for general people, slab rate of 2,50,000. For senior citizen aged 60 years or more, it's according to 3 lakhs. For senior citizen aged 80 years or more, it's according to 5 lakhs. So here is not 80 years and above, here it is 60 years and above case. So you will apply the slab rates of up to 3 lakhs, 0. 3 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. About 10 lakhs, 30%. These are basic slab rates for senior citizen. So see, accordingly I have calculated. See, I have given you one shortcut also for slab rate calculation. But I have warned you, don't apply the shortcut in the question of senior citizen. Otherwise, if he is not a senior citizen, you know the shortcut for slab rates I had given you. What was the shortcut? Remind me. Whenever your income is in 30% slab, directly calculate 30% minus 187,500. And if your income falls in 20% slab, directly calculate 20% minus 87,500. But that shortcut is if normal case. Senior citizen don't apply shortcut, go slab wise. So the tax comes to 61,000 something plus health and insurance cess. So this is the amount of TDS which will be deducted by bank under 194P. You know why I have done the calculation? Because question is expecting. See the title of question 6. Calculate the amount of TDS also, no? So I have to calculate that. So this was question number 4. Then question 5 I asked not to do. See, we are under question 6, point number 5. Then under question 6, point number 6, this was given in homework. See, in this question, what is given? Mr. Z, a resident individual. See, this question is firstly on 194O. Remember in 194O, what example I gave? Always remember my example. My website, sirishvyas.com. So I am called e-commerce operator. And through my website, I am selling the lectures of IDD professor. So IDD professor is called e-commerce participant. So whenever students buy video lecture from my platform, IDD money I have to give to IDD teacher, but I will give after deducting TDS at the rate of 0.1%, 0.1%, provided IDD sales is more than 5 lakhs. In case the IDD teacher is individual HUF, remember that. So keep that in mind and answer this. See here what is given. Mr. Z, resident, starts a new business on 1st November 25 for sale of unique t-shirts. He obtained a valid PAN and his name, he obtained a valid PAN in his name and registers himself with abc.com. So see, abc.com is a website and website is called e-commerce operator. And he has registered means he wants to sell his t-shirts through this website. So the person who is interested in selling his product is called e-commerce participant. E-commerce participant. And the website which you are using for your sale is called e-commerce operator. And who is required to deduct TDS? When operator makes a payment to the participant. Why will operator make the payment? Because sales will take place on the website. So website owner has to settle the account with Mr. Z. So TDS will be deducted in this transaction. Okay. So here one thing is clear. Z is e-commerce participant. abc.com is e-commerce operator. They have written also, see, abc.com e-commerce operator for sale of products in India. Then Mr. Z sold goods worth 60 lakhs through abc.com. Means abc.com, through that website, sales of 60 lakhs were generated. And 60 lakhs is more than 5 lakhs. If you remember, I told you, if through the website, the product which is sold, if the sale is not crossing 5 lakhs, and if the product belongs to some individual HUF, then TDS doesn't apply. Your product is belonging to Mr. Z, an individual. But his sales through the website is 60 lakhs. It's more than 5 lakhs. So TDS will apply. And then see what is given. E-commerce operator credited following payments from time to time to Z in its books of accounts. Tell me why this information is relevant. Credited in books of accounts. This is for the timing of deducting TDS. What is the time of deducting TDS? At the time when party's account is created or actual payment which is earlier. So what is the time when party's account is created? This is the time. This is the time when party's account is created. And what is the date of actual payment? That is also given below. So in short, the moment you see when party's account was created, that is basically to decide the time of deducting TDS. So see what they have given. Party's account was created on 31st December with 20 lakhs, 28th Feb with 15 lakhs. Full and final payments have been released by abc.com to Mr. Z on 31st March 26 after deducting commission of 10% on the gross sale proceeds. Means website operator, they are charging commission also. So after deducting the commission, they made the final settlement on 31st March 26. Okay. And then see what is given. Z received 10 lakhs directly in his bank account out of 60 lakhs through Paytm wallet. Remember this point also I had explained. In my example, it was like this. See, Some students made payment directly to the IDT teacher. So this kind of point is also given in the question. So see what is given. Some customer made direct payment of 10 lakhs to Mr. Z through his Paytm. Okay. So tell me, what is the final breakup of 60 lakhs sale? Out of 60 lakhs, 10 lakhs was direct payment by customer to Mr. Z, direct payment. Like that direct payment by student to IDT professor. And what about the balance 50 lakhs? Balance 50 lakhs, in that 20 lakhs was credited on 31st December and 15 lakhs was credited on 20th Feb. So what is the balance remaining? 50 minus 20 minus 15. What is the balance? 15 lakhs. This was released with the previous payment. See, this last 15 lakhs was credited and settled on 31st March only. See, initial 20 and 15 was just credited in the books of accounts. Settlement happened on 31st March. It was given in the question. Full and final settlement happened on 31st March. So on 31st March, what happened? That balance 15 lakhs was credited and settled also. So tell me, for each amount, when is the parties account credited actual payment? Parties account credited is for 20 lakhs, 31st December. For 15 lakhs, 20th Feb. So for 20th 15, these two amount TDS will be immediately deducted. Because what is the rule? Whenever the parties account gets credited or actual payment, whichever is earlier. So here parties account credited comes earlier. Anyways, actually see, I am doing this extra discussion. Question is not asking that. What was required by the question? See, I am discussing because I am teaching all these things these days. So I want to discuss as an extra thing. In question, what is asked? Tell me. See, you forgot the question. Question number 6 is targeting what? Discuss the provisions of TDS. Means TDS will apply or not. And calculate the amount. That's it. So if they are asking discuss the provision of TDS, TDS will apply under 194O. Who will deduct? E-commerce operator will deduct at the rate of 0.1% because the sales through the platform is more than 5 lakhs. This much is sufficient to write. And if they are asking calculate the amount, amount is also simple. What is the amount of TDS? Tell me here. Total sales 60 lakhs. Whether payment is done through the website or directly to Mr. Z. On entire amount of sale, TDS will come. So into 0.1%. That's it. Answer is over here. I am making some extra discussion that in real life, what will be the timing of TDS? So on 20 lakhs, TDS will be deducted on 31st December. Okay. Means on 31st December, there will be TDS payable liability on 20 lakhs of how much? 0.1%. Means imagine the books of accounts. As on 31st December, there will be a journal entry showing TDS payable of how much? 0.1% of 20 lakhs. Then on 20th Feb, there will be again TDS liability in the books. 15 lakhs, 0.1%. Then all other entry will come on 31st March. On 31st March, out of 60, this has already been accounted. So from 60, remove 35. So balance 25 lakhs TDS will appear on 31st March. This is just I am explaining the time when TDS liability will occur. And what will be the time of payment? Time of depositing. This TDS will be deposited on 7th Jan. This TDS will be deposited on 7th March. And the final TDS will be 30th April. Again I am saying this is an extra discussion which I am doing. This is not asked that at what time it has to be deducted and deposited. If it would have been asked, then we would have answered. So this was question number 6. See, this commission, actually when website made the final settlement with Z, they deducted commission. But TDS will come on gross amount, not net. In the law they have written, let's see, TDS under 194O is 0.1% of gross sales through the website. And this is not just because he asked me the doubt. In the act it's mentioned. I forgot to stress on that, but in the act also it is mentioned that 194.0 0.1% is on the gross sale which occurs through the website. And for that gross sale, whether the payment is received by the website or directly to Mr. Z, it's not relevant. But we will see the gross sale. You know what is the importance of gross? Because website operator will keep their commission. So after settling the commission, the participant will get little less. But TDS doesn't depend upon that little less. It's on the gross sale. So that commission information not relevant. We have to see what is the gross sale through the website, 60 lakhs. So TDS will come on the gross sales. Okay. Then question 9 is done, 10 is remaining. This was normal. In question 9, repairing of office building was there and it was done. Wait, repairing means it's a works contract. When you get some repairing done, it's a works contract. And those who have done the homework, you might have seen it's paid by a small individual HUF. Nitin is a small individual. How do I know? Because his turnover is 97 lakhs in the preceding year. So small individual HUF. So small individual HUF will not be covered in 194C. Primary section is 194C for works contract. Nah? But I will say this section will not apply because small individual HUF. But once you get exempted from CJH, you will be caught in M. But under M, the amount should be more than 50 lakhs. Here the amount is more than 50 lakhs. So 194M will apply. Why not C? Because small individuals and HUF are exempted from C, but you will be caught in M. And TDS will be 2%. You have to calculate the amount also because question is asked to calculate the amount. So 2% of 65 lakhs. This was normal question. Then question 11 we have done, 12, 13, 14, 15 we have done. Till 15 was earlier homework. Question number 16. This is also a good question. See, here what they are saying, Indian company pays gross salary and monetary perquisite of 7,30,000 to general manager. And besides, company provides non-monetary perks also of 1,20,000. General manager opting out of 115 BSc means he wants to go as per old regime. What you have to do? See, here they have not asked what you have to do. In the title of question 6 at the beginning only they have written that in every point you have to decide TDS is applicable or not. If he says calculate the amount. So tell me here what TDS will be applicable. Because the question is of salary, TDS under 192 will apply. And under 192, TDS will be according to the slab rates. So first you have to compute the salary. See, salary computation is not there in CA final syllabus, but they expect some basic calculation of salary from you. In salary, what we do, whatever employee gets from the company, add all minus standard deduction. In old regime, 50,000, new regime, 75,000. So I will calculate that thing. See here. His salary is 7,30,000 plus non-monetary perquisites 1,20,000. So total salary 8,50,000. Standard deduction 50,000. So salary 8 lakhs. On that I have calculated tax according to slab rates. This I have calculated according to slab rates. And slab rates of new regime or old regime? Old regime. Because he has opted out of 115 BSc. So as per old regime. And you know in old regime what is the shortcut? His income falls in 20% slab. So directly I will calculate 20% which comes to 1,60,000 minus 87,500. That will give me tax as per the slab rate. Plus health and education cess also you have to take. Don't forget that. So including health and education cess, the tax will be 75,400. Which slab rate I am applying? Up to 2,50,000, 2,50,000 to 5 lakhs, 5 lakhs to 10 lakhs. But instead of going in that long cut manner, I have given you the shortcut. Anyway, this you can calculate. This is tax with health and education cess. So answer is over here only. And even this TDS company will divide by 12 and they will deduct from every month salary. The salary TDS is deducted on month to month basis. Now see, this question was this much only, answer was simple. Now here I will put some extra point in the question. In one exam, you know what they had asked? What would be your answer if the tax on non-monetary perquisite company has agreed to pay? This is not part of this question. I am giving an extra thing because I remember in one of the past ICAI paper, this was asked. After that, there was one extra question. What was that extra question? What would be your answer? What would be your answer if company pays employees tax on non-monetary perquisite? You know why exam question was like this? Because in real life, many companies, you know what they tell the employee? That on non-monetary perquisites, tax we will bear. Because you know, non-monetary perquisite, you are not getting any money. You are getting car from the company, house from the company, you are enjoying. But after all, you don't get money. So to pay the tax on that, it pinches. So sometimes employees are pampered by the companies. You know what companies say? Don't worry, we understand non-monetary perquisites, taxes pinches you, but don't worry, we will bear the tax. Means this is a facility given by many companies to obviously high class employees. Means if you are a local employee, you will not get such facilities. But imagine you are an employee of a good category. So firstly, good category of employee enjoy perks like houses, car, they are called non-monetary. And on the top of that, the tax of non-monetary things are borne by the company. So tell me, if company has agreed to pay the tax on non-monetary perks, what will be the change in the answer? See, here they didn't say, na. So here what we assume, non-monetary perks tax employee will bear. And if employee has to bear, it will be cut from his salary, So we said cut 75,400, assuming all taxes were borne by employee. But what if company says that this tax we will bear? See, this is not tax amount, this is the benefit amount. But on this company is ready to bear your tax. Then what will be the answer? So see, this was one exam question. Huh? So see what you will do. If on 8 lakhs, the tax comes to 75,400. What would be the tax on 1 lakh? 20,000. Cross multiply. See, first 1,20,000 is an item of income from salary. So you have to include in the head income from salary. So including 1,20,000 in salary, the tax comes to 75,400. Okay. But that is if employee has to bear everything. But what if company says, don't worry about 1,20,000. Tax on 1,20,000 we will bear. But now how to calculate tax on 120? See, when you calculate slab rate, tax is not on an item. Slab rate is applied in totality. So in totality you applied the slab rate, na? But now I want itemized tax. Itemized means which item? 120. So see, I will do cross multiplication. Like this. If tax on 8 lakhs came to 75,400, what would be the tax on that item? Which item? 120. Okay, why I am behind 120? Because I am assuming question says company is agreed to bear the tax on non-monetary perquisite. See, this is not anything I am doing randomly. Huh? This has come in one past paper. So tell me, if company is ready to bear tax of 1,20,000, what would be that amount? Cross multiply. Because slab rate taxation is not item wise tax, it is on totality. So if you want of one item, you have to do it by cross multiply. So how much it comes to? 11,310. So now tell me what will happen. Look, company was actually supposed to deduct TDS of 75,400, but company will say, okay, we'll do one thing. We will not deduct 11,310 from your salary, we will bear. So what is the net amount? Find out the net amount. 64,090. This amount will be TDS. Tell me why my TDS reduced? See, TDS, when it is cut, employee has to bear the pinch. But company has given a facility of what? Don't worry. Your non-monetary perks, tax, we will manage. So that means 11,310 company will pay. And when company pays, why will I suffer? So my TDS will be less. This question was asked in one exam. Okay. See, I have done this for you. See, I have already mentioned this is extra working. What answer we get? We got 64,090. But see, if you see ICAI past paper, you know how they have done calculation of 11,310. How did I do? I did by cross multiplication. But in the institute solution, they have given average rate. See, they have calculated one percentage. See, actually slab rate has got multiple percentage. In slab rate, how many percentages are there? 0, 5, 20, 30. So they average it out. Average means divide 75,400 by 8 lakhs. You get a percentage. See, in cross multiplication also, indirectly I did that only. Tell me how cross multiplication was done, tell me. 75,400 multiply by 1,20,000 divided by 8 lakhs. So this is kind of a percentage only. See, why I am trying to talk about this percentage thing, because in institute solution you will find something like average rate of tax. So you should be aware of, otherwise you should not feel that what is all this nonsense, we have never studied all this. See, I simplified by cross multiplication. Cross multiplication sounds very convincing, na? So you can do like this also, but in ICAI solution, you know what they have done? They have converted this into a percentage, which comes to 9.425, and 1,20,000's 9.425 comes to 11,310. And that much tax if company will bear, my TDS will be reduced accordingly. So this was very important part. You can mark this important. Trust me, this can come as an question in your paper. But in my question, as it is printed in the book, it was not asked. If I want to ask this question, in the question only I have to add, what would be your answer if company agrees to pay the tax of non-monetary perquisite on behalf of the employee? That way they will specifically ask, then your answer will be like this. Then question 17. In question 17, we have taken building on rent and machinery on rent. And you know who is the payer of the rent? ABC Limited. See, there is one trick that whenever the question on rent comes, immediately check the payer. If the payer is small individual HUF, 190 for IB. Big individual HUF, 190 for I. So check who is the payer. ABC Limited. So that means small individual HUF, big people they are. So 194 I will apply. And you know under 194 I, what was the TDS? Land, building, furniture 10%, plant, machinery, equipment 2%. So here see, we have taken building also on rent, machinery also on rent. And what is the rate of TDS on land, building, furniture? On land, building, furniture, TDS is 10%. Plant, machinery, equipment, TDS is 2%. But this is under 194I, right? What is the threshold in 194I? Rent should be more than 50,000 per month. Check, is it crossing the threshold? Building rent is 40,000 per month. Machinery rent is 20,000 per month. If you see building and machinery separate, both are separately below 50. So what to do? Will you check separate or you will check combined? Combined. One section, one threshold. See, eventually all this TDS is coming under 194I, and in my one lecture I mentioned this, one section, one threshold. So 194I is a common section, so threshold will be checked in combined. Although in the question they have said we have made two separate agreement, make it. What difference it makes? Eventually TDS is under 194I na. So section is 1, so threshold is always checked in combined manner. Yes, there is an exception of 194J. In 194J, law has specifically mentioned 50,000 each. Per, 50,000 each. So there each was mentioned. So this itself shows the intention of the law. Whenever they want to mention each separate, they write in the act, na? Just as for 194J, they have mentioned each. So there the intention is each. But in 194I, is 50,000 per month written as each property? It's not mentioned. So it's combined rent of all properties. Land, building, furniture, plant, machinery, equipment. Combined you have to check more than 50,000. This question has come as it is in ICAI paper. This is basically question 6 which we are doing right now. It's a compilation of past paper. So what you will do, you will check property wise or combined. Okay. So because 194I is a common section, 50,000 per month will be combined, and combined if you see 40 plus 20, what is the combined rent? 60,000 per month, which is crossing 50,000 per month. So TDS will come. See, for checking the threshold I have combined, but percentage on 40,000 will be 10%, 20,000 will be 2%. Because the rate of TDS is what? Land, building, furniture 10%, plant, machinery, equipment 2%. So percentage for percentage purpose, this I will keep separate and 2%, and this I will keep separate and I will take how much? 10%, okay. And anyways, rent of building is started from 1st September. So what will be the TDS? Tell me. 40,000 per month from September onwards. How many months? Tell me fast. From September onwards, how many months? 7 months. So 7 months rent of building, and TDS on building will be 10% TDS. 10% is TDS. This is building TDS. And what about machinery? 20,000 per month. But this rent started from October, 1st of October. So into 6 months. And the percentage of TDS is 2%. 2% TDS. Okay. TDS you will separately work out 10 and 2, because building 10%, machinery 2%. But applicability is based on combined rent. Then question number 13. See, this question 13 story I will tell you in my way. Then we will read this para. Right now don't see the para. Listen to my story. Look. In this question what they are saying, there is one girl, Miss Tara. She is having good number of followers in Instagram. She is a social media influencer. Means maybe she is having say millions of followers in Instagram. And nowadays people having so many followers on Instagram. Companies approach them for advertisement. Because see, imagine if I also have millions of followers on my Instagram channel. That means so many people are watching my channel. So if I do any publicity, that product will be exposed to so many people. So you know what happened? There is one company who is selling electric cars. There is one company who is selling electric cars. Look, that company, look at the drawing, company approached Tara. And you know what did company request Tara? That will you do publicity of our electric car on your Instagram channel? So Tara said, obviously, yes, why not? Why did I create so many followers? So what was the agreement? Company wanted to do publicity of its cars on the Instagram channel of Tara. So tell me, for what will be the charges of Tara for this? Tara will charge something for that or not? That charge is called advertisement. So tell me, the transaction between company and Tara is what? Advertisement works contract. What is the meaning of works contract? If someone is doing work as per our requirement specification, so Tara will have to make the video for Instagram channel as per the requirement of the company. If company says, Tara, you speak for our car in this manner, in this tone, so Tara will do as per the requirement of the company for which she is paid. But whatever, it is an advertisement thing only. And on advertisement, TDS comes under 194C. So when company makes payment to Tara for promoting the product on Instagram channel, it will be advertisement payment 194C, TDS of 1%, because Tara is individual, 1%. But question was not on that. You know what did question say? That company told Tara that before you make the video, rather Tara told company that before I put any video on Instagram, I personally want to see how the car is. Because if the car is not good quality car, so I don't want to promote such car, because I have got loyal followers. My followers will go down. Like, see, if I promote something on my Instagram channel, so people trust me, and if I do wrong promotion, my image will spoil. So that's why what Tara said, Tara told company, first I will personally use the car. I will see how the car is. If I really like the car, then I will make good promotion on my Instagram channel. So company said, okay, you can use the car first. So, for 7 months, Tara used the car. And after using the car, she was happy. And she said, this is really good car. What an amazing car. And once she was satisfied, she made a video of that car and put it on Instagram channel. So see, for putting on Instagram channel, she is getting advertisement amount. For that, TDS is 194C. What about the car which she was allowed to use? She used the car for 7 months. So see, here if company would have given the car to her to keep it, then it would have become perquisite. Then TDS would have come under 194R. It would have come if company would have given away the car to Tara. And companies do like this in real life. Many companies, what they do, whenever they approach social media influencer, they give their product free of cost to them. So if company would have said, Tara, you keep the car for free. Plus you will get charges for making video on Instagram. So tell me, if the car was given away to Tara, then it would have become perquisite. You know what is perquisite? Whenever you get something extra over and above your main charge. See, Tara's main charge is what? I want money for putting a video on my Instagram channel. So the money which he is going to get for advertisement, that is his main income. For that 194C works contract. But if in addition she gets car also to keep it with her forever, then it becomes perquisite. But in this question, car was given just for test drive, not forever. It was just for testing purpose, so that Tara is convinced with the car's quality and she can confidently make a video. So it doesn't become a perquisite. So finally, 194R will not be attracted. See, it sounds like, look, she was given car for 7 months to use. So giving car for 7 months doesn't become perquisite, na? It's a basic thing, because without that, if she is only not convinced with the quality of the car, how will she do the promotion on her social media channel? But yes, if the car was given away to her, then it would have become an added perquisite. Like, many times on Instagram you see many celebrities, they promote Oppo, Vivo, mobile phones. So when they make promotion of mobile phone, mobile company gives away the phone to them. But because it was a car, kind of such a costly thing, company might not have given away the car. But what if company would have said, this car you use and you keep it with you? Then for Tara, it is an added perks. Then TDS under 194R will apply. Here it will not apply, because it is clearly given, see, he returned the car to the company. Because she had to return the car to the company, it could not become a perquisite. So if TDS comes, it will come only on the main monetary payment done by company to Tara for advertisement, that is 194C. See, here basically two things were tested, C and R. C is for what? Advertisement, ABC Jal. Okay. And R is for the perquisite. This will definitely apply, but this won't apply because car was returned back to the company. Okay. It was not kept as a perquisite. So these were the homework questions. Okay, then see, in TDS we were doing general notes. We were doing general notes, and in general notes we have got 12 points to be done. And out of 12, point 1, 2 and 3 we have done. Okay. Now see the fourth point. Fourth point is about filing TDS returns. See, every tax deductor has to file TDS returns 4 times in a year. These are called quarterly returns. Look at this. 4 times you have to file TDS return. But tell me, what do you mean by filing TDS return? Means you have to fill a form. There is one form called Form 26Q. A form you have to fill. And in the form you have to give details about how much TDS you have deducted in a particular quarter. It is quarter-wise reporting. Like see, what is the first quarter? April, May, June. So in April, May and June, how much TDS you deducted, for which transaction, and whether you deposited a TDS or not, if deposited, on which date you deposited, that detailed summary you have to make in one form, and that general form is Form 26Q. Sometimes the forms are different, and anyways, you are not expected to remember the form number. It is just, I just want you to give a real feeling that in real life, there is some form called 26Q which you have to just fill up. So in short, filing TDS return means you don't have to make some payment. It's not a money transaction. It's a transaction of filling the form. And that filling of form you can do online. And that you have to do latest by 31st July for the first quarter. And for the second quarter, 31st October. See, after each quarter you get 1 month breather to prepare the return. Like see, first quarter ended in June. So after June you have got full July month. See why government gives you 1 month? Because in 1 month you can prepare the summary of how much TDS you deducted and deposited, and that you have to give in a form 26Q, and that you have to submit. So this way for each quarter you get 1 month gap. But in last quarter, see, you are getting gap of 2 months. See, last quarter will end on March, but you have to file the return by 31st May. In between there is a gap of 2 months, April and May. Why 2 months? Because in last quarter there is March, and March month TDS you deposit by 30th April. So till 30th April you are depositing, and only after you deposit you can file the return. In the return you have to show the details about TDS deposited. And if government says no, last quarter return you file by 30th of April, how it is possible? By 30th April I am busy in depositing the TDS. So that's why last quarter return you have to file by 31st of May. Okay. Now, if you don't submit the return as per the due date, you have to pay late filing fees of 200 per day under section 234E. I had this section 234E. This will levy late filing fees of 200 per day. 200 per day. So tell me, first quarter return I have to file on 31st July. What if I file on 11th August? What if I file the return on 11th August? So how many days delay? 11th August means 11 days. So what is the late filing fees for 11 days? It comes to 2,200. This much late filing fees you have to pay under section 234E. But see, there is one restriction. Look here. If in this quarter my total TDS was only 500, then late filing fees cannot be more than 500. See, according to 11 days working, it comes to 2,200. Per day 200, per day 200. So 11 days 2,200. But at the same time, law says if in this particular quarter your total TDS, whether on CD, Wakraf, CP, any transaction, if the total TDS of that quarter is just 500, so late filing fees will be restricted to 500. But tell me, if in this quarter my total TDS was 95,000, then late filing fees will be 2,200. Means actually there is a formula, 200 per day into number of days delayed or the TDS amount, whichever is less. You can make a formula which is less. They have written here 200 per day, but maximum will be the amount of TDS of that quarter. See, this restriction is important because sometimes in a particular quarter, hardly you had some TDS transaction of say 100, 200 rupees. And for TDS of 100, 200, if you don't do the reporting on time, reporting means filing the return on time, government cannot severely punish you, na? So, punishment is 200 per day but restricted to the amount of TDS. Now, if you don't file the return for 1 month after the due date, tell me what is the due date for first quarter? 31st July. So after 31st July, if you delay, there is 200 per day. But if the delay is more than 1 month, if the delay is more than 1 month, means can you calculate 1 month? 31st August. If the delay is beyond 31st August, then you have to pay penalty also. Why did I say also? Late filing fees will start immediately. The moment you cross 31st July, for every day of delay, 200 per day is definitely there. But if the delay is more than 1 month, then you have to pay additional penalty also. You know how much penalty? Minimum 10,000 to maximum 1 lakh. And this is in addition to the late filing fees. So tell me if you understood answer. If your delay is just for 5 days, so for 5 days 200 per day. 10 days 200 per day. But if your delay is more than 1 month, so that 200 per day will come. Plus penalty also. Penalty of how much? Minimum 10,000 to maximum 1 lakh depending upon assessing officer. He can levy penalty of 10,000 also and it can go till 1 lakh also. It can be anything between that also. And this penalty is 271H. See, I have written here, look. Means this section is actually warning you that make sure you pay your TDS dues and file the return latest in 1 month. Tell me how I am calculating 1 month? From the due date of the TDS return. See, after the quarter you get 1 month normal time for filing the return. And from the due date means 31st July, after that you calculate 1 more month. And what is the warning given by 271H? That if in that 1 month period, if you don't pay your TDS dues and if you don't file the return, for filing the return first you have to deposit the TDS. Without depositing the TDS you cannot file the return, because in filing of return you have to show details about TDS deposited. So pay means what? Whatever TDS you deducted in the quarter, you deposit. And whatever you deposited, you show the information, file the return within 1 month. And if you delay beyond 1 month, see this, beyond 1 month, penalty will also come. Will also means that 200 per day will continue forever. Plus penalty also. How much? Minimum 10,000 to maximum 1 lakh. See, here a student should feel law is so strict. Means if you delay the return beyond 1 month, you have to pay double thing, 200 per day plus penalty. And penalty is also not small amount. It can go till 1 lakh also. Tell me why the law is so strict? Because see what happens, imagine if I have deducted some TDS and if I don't deposit, if I don't file the return, government will not come to know about that, na? Like see, you are the other party. While making the payment from 1 lakh, I paid you 90,000. Assume 10% TDS. Means while making the payment to you from 1 lakh, I paid 90,000. I deducted 10,000. See, the moment I deduct 10,000, what do you expect? I will get the credit, I will get the credit. But you know what tax deductors do? They are careless. They deduct the TDS and they don't deposit. And they are careless. Even if they deposit, they don't file the return. And unless I file the return, how will government come to know that your TDS I have cut and deposited? See, I might have cut also. Let's assume I might have deposited also. But me depositing your TDS, government comes to know only when I file the return. And imagine if I delay in filing the return only, what will be government's impression? That there is no TDS, no TDS, and it will trouble you. Imagine in the meantime you have to file your returns. In the meantime you have to file your returns. So while filing the return, what will you expect? You will expect a credit of TDS, but you will not get the credit because in government's record it is not reflected. Why not reflected? Because I haven't filed the return. In short, see what I am trying to sensitize, for income tax department, filing the return on timely basis is must. Because only we people, when we file the TDS return, government actually comes to know that yes, some TDS has been deposited. See, I have to deposit, but other party has to claim the credit of that. Na? So for him, it creates a trouble. And ultimately, everything comes to a mess. That's why, government has given a straight warning. Maximum delay should be 1 month. And if you delay beyond 1 month, we are warning you that if you delay beyond 1 month, you will have to pay late filing fees plus penalty. You know how to remember this section 217H? In my Hindi batch I say, Had kar di. Had kar di means, in English also I can translate, heights. Too much. 1 or 2 days delay is understandable. 5-10 days delay is also understandable. But you delayed beyond 1 month, it's a height. Height means H. In my Hindi batch I say, Had kar di. Aapne had kar di. Had kar di means you cross the limits. So that had is from the alphabet H. In my English batch I say it's too much. Heights. So H. So this 1 month you have to buy heart. And this 1 month is from the due date of TDS return. See, although in my drawing I am portraying from 31st July, this applies to all quarters. So tell me, for last quarter, what is the normal due date? 31st May. So how will you calculate 1 month? After 31st May, 1 month comes to 30th June. So as soon as 30th June comes, you should be so serious that you make sure you file the return of last quarter. Otherwise, what will happen? If 30th June is crossed, your delay will be counted more than 1 month. And then the additional charge of penalty will come along with late filing fees. Now see, what is the form for filing the TDS return? 26Q. But if I am deducting TDS on salary, it's 24Q. If I am deducting TDS of a non-resident or a foreign company, then 27Q. Just for knowledge, you don't have to remember. See, I have written here. If you are deducting TDS for salary, 24Q. And what is the general TDS form? 26Q. And for NR, 27Q. This form you have to literally fill online and you have to submit. And this you have to do 4 times in a year. Okay. Now see, under 4 sections, if you remember last lecture I told you, government is guilty of giving compliance burden of TDS. So tell me, which TDS sections government has felt guilty of giving compliance burden of TDS? Guilty sections. 194 IEA. Guilty means who is guilty? Government is guilty. Guilty why? Because these sections government felt that we should not have kept TDS, but government has still kept, which is a burden for the people. Like in 194 IEA, if I am buying a house in my personal life, why they should bother me for TDS? But still I am bothered. So 194 IEA, then IB, small individual HUF paying rent. Just because it is immovable property more than 50,000, I have to deduct TDS. Then 194M, works contract, professional service, other commission. Even small individual HUF have to deduct TDS. Even personal transactions are covered for TDS. Then 194S, cryptocurrency. Even small individual HUF, if they buy cryptocurrency, they have to deduct TDS. So these 4 sections are where government feels guilty. Government has compensated by reducing your burden. What does this 4 sections say? First it says, under these 4 sections, never take the tension of 7th of next month. it will always be 30th of next month. Another relief. When these people, which people? 190 for IA, IBM and 190 for S by small individual HUF. When these people deposit TDS, they have to compulsorily deposit online. Do you know how do we deposit TDS? I have a choice. I can go to some bank and deposit TDS with TDS challan, or I can deposit online. But you know, for these four people, TDS deposit is compulsory online. You know why? Because when you deposit the TDS compulsory online, there is one challan which you will see on the computer. So fill that challan, and that challan is deemed as return also. Then separately filing of return is not required for these four cases. See what I am trying to say, under these four sections where government is guilty of keeping TDS, filing of TDS return is not required. So what government has given the option to you? That when you are depositing the TDS, anyways you will deposit when? Not by 7th of next month, by 30th of next month. So you have to deposit TDS. Depositing you will have to do. So you deposit online. Because if you deposit online, there will be one form. So that form when you fill for depositing, actually you are depositing TDS. But we will treat it is your return also. It's a challan cum return. In online you will get challan cum return. See, for your knowledge, the form is like this. Look. Under 194 IA, you go online. You can also Google and see TDS challan for 194 IA. Can you see section 194 IA? Immediately in Google you will find form. See the form. Form is 26QB. And that QB you have to fill the details. And that form is actually for depositing TDS. But what law says? It is challan cum return. So you know what is the advantage? Now on quarterly basis I don't have to separately file the return. So see, distinction between normal people and these four sections. Normal people has to do two work. Depositing TDS by 7th of next month and filing of return quarterly basis. Double work. But for IA, IB, M and S, double work or single work? Single work. Firstly, that work is not to be done by 7th, it is to be done by 30th. And that also when you do the work of depositing the TDS, while you deposit the TDS, make sure you deposit online. And there will be one form that's called challan cum return. So no need to separately file the return. See, all this knowledge useful for your articleship also. Means in case you come across a client, his TDS is under 194, say IB. So what you will do? Under 194 IB, firstly when you have to do TDS? At the end of the year. So at the end of the year, TDS will be deducted and you will deposit by 30th of next month. So what will you tell client? I will deposit your TDS and you will fill which form? 26QC. It will come online only. And that 26QC will be actually for depositing the TDS, but that challan will be called challan cum return. See, actually these form numbers you don't have to remember, but you know what I felt? It's actually simple to remember. See, IA, IB. So it starts with IA. What is after A? B. So B, C, D, E continuously. See, 194 IA, you will remember. So after A, there is B. Then it is continuously B, C, D, E. And 26Q is a very famous form. What additional alphabet you have seen? 26Q, B, Q, C, Q, D, Q, E. Tell me if you understood what is QE. Can you explain if you understood? If a small individual HUF purchases Bitcoin, cryptocurrencies, virtual digital asset, small individual HUF, and if you purchase it for more than 50,000, and when he makes the payment, he has to deduct the TDS. So for example, cryptocurrency was purchased by a small individual HUF in September. In September, I purchased Bitcoin of 95,000. To explain now, what will I do? In September, I purchased Bitcoin of 95,000. I am small individual HUF. So threshold is 50,000. So I purchased for 95, so TDS will apply. And I did it in September. So I have to deposit by 30th October. 30th of next month. Here it's never 7th of next month. It's always 30th. So in September, if I purchase Bitcoins, cryptocurrency of 95,000, so I have to deposit the TDS by 30th October. How much? 95,000, 1%. And how will I deposit? I cannot go to bank. Compulsory online. Means I will have to start my internet. I will see one form called Form 26QA. And in that I will fill 95 on Bitcoin purchase. 1% comes to how much? 950. Correct? 950. So that TDS I will deposit. I will make online payment. And that challan will be called challan cum return. Now I don't have to file a separate return. Means this is how these four sections operate. Which four section? IA, IB, M and S. So in short, I just took a random example of S right now, virtual digital asset. But just remember, whenever IA, IB, M and S comes, two things are important. Firstly, depositing tension is not 7th of next month, it's 30th. And secondly, for depositing, don't visit a bank. Open the website, deposit online, and depositing form will be challan cum return. Then separate filing of return not required. So this is to relieve the compliance burden under these four sections. So it's all about TDS return is done. Okay. Then see one good analysis I have done. What are the three major TDS compliances? One more thing I want to say. See this payer and receiver which I say, actually in the law they have not written payer. You know what they have written? Deductor. And receiver is called deductee. So by chance if you are writing answer in your exam paper, avoid writing payer receiver. They will not deduct marks. You will get full marks even if you write payer receiver. But preferable to use the word deductor and deductee. Payer and receiver was my tone of simplicity, okay? But the actual word is deductor, deductee. So see what I was saying, look. What are the TDS compliances for deductors? Deductors. Three compliances are there. Tell me what three compliance? Deducting the TDS, then depositing, filing the return. These are the three main jobs. Now tell me what is deducting, what is depositing, what is filing return? Deducting means creating liability in the books, TDS payable. Depositing means visiting a bank and making the payment. And if you don't want to go to bank, you have to make payment online. So this is literally done either through bank or online. But here it is a payment transaction. This is a books transaction. In books you have to create the entry. This is actual payment. Either in bank or you can do online also. Filing return is done online. This is filling of form. This is filling of form. This is entry in the books. And this is money payment. Depositing TDS. Then tell me another distinction between the three. Distinction between. Because see many students, you know what they feel. Deducting, depositing, filing return is all one and the same. There are three different activities. Next point, look. Deducting is a daily activity. When do you deduct TDS? Parties account credited. Actual payment, whichever is earlier. So actual payment can happen every day. Parties account credited can happen every day. So it's a daily activity. Depositing is 7th of next month. So it's a monthly activity. Return filing is quarterly activity. See this distinction they don't ask. But this gives you clarity. So on day-to-day basis you have to worry about creating liability in the book. TDS payable. Monthly basis tension of 7th of next month depositing. And quarterly returns is quarterly tension. Now, if you don't respect these three things, what will happen? Consequence. Tell me if you don't deduct TDS, what will happen? For late deduction, there is interest of 1% per month plus penalty of 271C. And for late deposit, interest of 1.5% per month and prosecution behind the bars. You know, this point I had explained. See this, see. Last lecture. For not deducting penalty, for not depositing, jail. And this is along with the interest. Same thing I have written here, look. If you don't respect deducting interest and penalty, if you don't respect depositing interest and prosecution, And if you don't respect filing of return, late filing fees plus 271H can also come if the delay is beyond 1 month. This I explained right now. Late filing fees is confirmed 200 per day. But if the delay goes beyond 1 month, 1 month from the due date of TDS return, then late penalty of 217H will also come. Minimum 10,000 to maximum 1 lakh. See, this is a good analysis. This gives you full clarity. You should study this and observe this properly so that you have full clarity. And all this is useful in your day-to-day life. Even after becoming CA, this knowledge if you don't have, no one will respect you as a CA. And then see, one more thing. I was going to say one, yeah. You know, this TDS return is a word used by chartered accountants, practicing CAs. In the act, they don't use the word TDS return. You know what they say? Quarterly statements. What they say? Quarterly statement. So if in the exam they use the word quarterly statement, so you understand it's this only. Trust me, in exam paper they will never use the word TDS return. TDS return is a word created by practicing chartered accountants. It's a casual tone. Okay. But actually, as per the law, the language is quarterly statements. Okay. So you should have the habit of calling this as quarterly statement, especially while you are writing the paper. Okay. We are doing general notes. Point number 5, 197A. You know, this section gives you the facility that you can stop your TDS. See, sometimes, you know, someone is deducting my TDS, it's bothering me. You know why it's bothering me? Because my overall income is below basic exemption. See, look at me and understand. Look at me. Imagine my total income does not cross 2,50,000. So according to slab rates, my tax is always 0. But still some people, they don't understand. They deduct TDS. Like company, when they give me dividend, what is the rule in dividend? What is the rule in dividend? If company gives me dividend of more than, see, think from receiver angle. In this point, think from receiver. I am receiver of the income. Imagine I am receiving dividend of more than 10,000. Say I am receiving dividend of 25,000. So if my dividend income is 25,000, obviously company will deduct TDS. But I don't have any other income. My overall income, if you see, is not even crossing 2,50,000. So when I file my return, my tax is 0. But still, company, when they gave me dividend, they deducted 10% TDS or 2,500. So that TDS I will have to wait for the return. Or wait for the refund. So that is a trouble for me. Tell me, how will I file my return in this example? My 5 heads of income: salary 0, house property 0, business 0, capital gain 0, income from others or dividend. My dividend income is 25,000, which actually I got net, but I will show gross 25,000. You know, receiver of the income has to report gross amount. So what is my gross dividend? 25,000. So if you total my 5 heads, my gross total income is 25,000. Chapter 6 is nothing. Net taxable income 25,000. Then Satak, Latak, winnings balance 25,000 will go in balance. Tax is 0. Then surcharge, health and insurance is 0. And then at the end, what I will say? Company deducted 2,500. How did I get 2,500? 10% of 25,000. So that my tax is nil. But 2,500 I will wait for the refund. Now waiting for the refund is unnecessary trouble for me. Na? When my tax is not there only, why the hell they are deducting TDS? It's troubling me. Because first they deduct and then while filing the return I have to claim the refund. And God knows when will I get the refund. This is a common problem with many people. Especially those people whose income is below basic exemption. So for such people there is a facility. If you want, you can stop your TDS. Like if I want that on dividend income they should not deduct my TDS, you know what I will do? I will fill one form 15G and I will give it to the company. Company means the company who is giving me dividend. Like assume I am getting dividend from Reliance. So I will do one thing. I will fill one form number 15G. See here what I have to write. I, Shirish Vyas, I declare that my total income does not cross basic exemption limit. Please don't deduct TDS. This form I have to sign with my PAN number. And this form I will give to company. And once company receives the form, they will not deduct TDS in this year. Next year again, if I want, once again I have to fill form 15G. I had the form 15G, and by filling the form 15G, company will not deduct TDS. And if I'm a senior citizen, resident person 60 years and above, then I will fill form 15H. So just by filling the form, you can stop your TDS. This facility is given by section 197A. See, while teaching this point, my mind knows many of the students are aware of this knowledge. But I don't want to take this granted because in continuity there is a lot to speak. But if I am not wrong, many students are aware of this because this is a very normal thing. Even people who are having no connection with taxation, they also know that there is one form which is very famous 15G. If you fill the form, TDS will stop. Same thing I said. See, actually how it will work? The receiver of the income, he will give the form to the payer. In my example, I was receiver of dividend. I gave the form to the company. Why company? Because company is the payer of the dividend. And then TDS will not apply. And this you have to do once in a lifetime or every year? Every year. And in this form, what's written? It's a declaration that my income does not cross basic exemption. See, someone can give a false declaration also. Imagine I am having income of 10 crores. Still I will fill a form. I, Shirish Vyas, hereby declare that my income does not cross basic exemption limit. And once I give this form, this is actually false. Huh? Imagine I am having crores of income, but still I filled a form. But don't worry, this form will go to the company. Na? Company will pass on to IT department. And their intelligence department will start doing working. And they will do inquiry on Shirish Vyas. And if they come to know Shirish Vyas is a liar, I will have to face the consequence sometimes behind the bars. So it is not that simple. If someone says, who will come to know, I will just fill a form and sign it. Na? I just have to say what my income does not cross basic exemption. Who will come to know? See, you are thinking who will come to know. But you know this form, once I give it to the company, company will pass on to IT department. And if they come to know, I will have to bear the consequence. In short, it is never advisable to give a fake form. Only if you genuinely have income not crossing basic exemption limit, then you fill the form with rights. And then your TDS will stop. And this you have to do every year. But you know, this facility is available only for dream income. This facility of filling form 15G and stopping your TDS is not applicable for every income subject to TDS. It's only for dream income. See how to remember. If you have the dream that TDS should not be deducted, that dream of no TDS can be fulfilled only for dream income. I'm rhyming. If you have the dream of my TDS should not be deducted, so that dream will be fulfilled, but only for dream income. And to fulfill the dream, you have to fill form 15G or H. You know what is the full form of dream? D for dividend income. D dividend, R rent under 194I. 194I, not IB, huh? 194I. Then another R is premature withdrawal from RPF. I stands for interest income. Both the interest incomes. Interest on security, interest other than interest on security. Second I is insurance commission. Third I is insurance claim, life insurance policy, big premium policy, maturity amount. M for mutual fund income. Only for these income, this facility is available. Now the doubt should be why only for these incomes? First tell me the full form. Dividend income, rent under 194I, premature withdrawal of RPF, and what are the three I's? Interest on security, other interest, both the interest, insurance, commission, insurance, claim. Interest income means actually both interest I am saying, both interest. Second I, insurance commission. Third I, life insurance claim on maturity, big premium policy. M for mutual fund income. Only these incomes TDS can stop by giving form 15G. Why? Why for these incomes? Why not for every income? So see, the reason for this is, you know what? this concept of 15G, you know why government started? Keeping in mind housewives and senior citizens. You know, when government started the concept of 15G, what was going in government's mind? Tell me what was going in government's mind? That there are many housewives who simply do household work. They are not working females. They don't have income, but they get little bit of rent, little bit of dividend income, and TDS on that will bother them. Similarly, senior citizen. Tell me what is the lifestyle of a senior citizen? Full time sitting at home, not working. Tell me who are the two non-working people in India? Housewives and senior citizen. So government thought of them. When government started the concept of 15G, what was there at the back of government's mind? That housewives and senior citizen, they are not working people. But even though they are not working people, they might have some dividend income, rental income, which they get sitting at home also. And if TDS is deducted, it will trouble them. And we don't want to trouble this poor housewives and senior citizen. So that's why government said, okay, we'll do one thing. You fill one form, your TDS will stop. So it was keeping in mind housewife and senior citizen. And in the life of housewife and senior citizen, these are common incomes. You will also believe that dream income are very popular in the life of a housewife and a senior citizen. Like imagine a senior citizen full-time sitting at home, or a housewife, she does only household work. Don't you think they might popularly have these incomes? Like a housewife, she doesn't do anything. She is not doing job or business, but she gets dividend income. She gets rent income. She is doing LIC agency. LIC agency, you get insurance commission. She might get bank FD interest. She might have a life insurance policy which has matured. She might have mutual fund income. I am repeating these points. So, you know what law felt? These incomes are so common in the life of housewives and senior citizens. So, let's make a very simple rule for them, that whenever you feel you have got these income, don't worry, your TDS will stop. Just you have to fill one form. But then, let me warn you, this section was created keeping housewife in mind, senior citizen in mind. But as a student, please don't study like that. As a student, even if you're not a housewife or senior citizen, anyone in India can claim the benefit. See, when the rule is made, it is universal for everyone in India, na? But while making the rule, what was at the back of the mind, that I am sharing. And you know, that I shared just to convince you that in the life of housewife and senior citizen, these are very common incomes, which every senior citizen might be having dividend, mutual fund income. So for such common incomes, government wanted a simple rule of submitting form 15G and TDS will stop. But then in exam, don't write housewife and senior citizen. You can write any person. In fact, see in the law they have written, any individual HUF, if he claims that his total income does not cross basic exemption limit, he can fill form 15G or 15H in respect of dream income so that his TDS will stop. Okay. But now, right now, what did I say? Dream incomes are the only popular income in the life of housewife and senior citizen. But now, what if they have some other income which is bothering them? Bothering means bothering for why the hell TDS when my income is nothing. Like say imagine a housewife says that my income is zero, but I am doing some estate agency work. In that I am earning commission and these people are deducting TDS. What nonsense. Listen to my example carefully. Housewife. She is practically not doing job or anything. She is housewife and she is doing estate agency work. You know, in estate agency work you get other commission. Other commission. DGH. What is H? Other commission. D is insurance commission. G is lottery. H is what? Other commission. So please create an example of a housewife and she has got some estate agency. Means housewife is she is doing household work, but during afternoon time she might be getting some time. So she shows some property to the clients and she might be getting brokerage commission. Now, let's assume that housewife is getting commission of 40,000. So tell me, on 40,000 TDS will come or not? What is the rate for other commission? 2%. On 40,000 TDS will come. But you know now what is the problem with housewife? She is thinking, my income is nothing. Just one estate agency deal I did, in that TDS is bothering me. Now when the housewife files the return, she has to claim refund now. And she cannot even fill form 15G. See, for estate agency commission, this form is not applicable. This rule of 15G is for which income? Dream. In dream income, do we have estate agency commission? What was I? Tell me. Both the interest incomes. Insurance commission was there. If housewife is doing insurance agency, she can give form 15G to LIC or Birla Sun Life and she can say stop TDS, stop TDS. But in my example, she has got commission from estate agency work. So for that, form 15G is not applicable. Now what to do? So see, there is one more method. Look, one more method. This other method you will follow if you are not able to give 15G. So there is one method. You know what this housewife will do? Listen carefully. She will fill one form. Form number 13. What is the form number? 13. Here she will make an application to assessing officer. She will write like this. I, housewife, dear assessing officer, please listen to me. I am getting estate agency commission and these people are deducting TDS. It is troubling me. My income is not crossing basic exemption limit. What nonsense. Why the hell TDS should be there? Please, I am requesting, dear assessing officer, dear assessing officer. And this way she will sign and write the PAN number and give the form to AO. And then AO will read the form. And if AO is convinced, oh, this poor housewife has to suffer from TDS. Okay, don't worry, I will do something. AO will make a certificate and give to the housewife, and that certificate is a certificate that no one can deduct my TDS now. But that certificate is specific to estate agency commission. Means now you know, whenever I do any estate agency deal, I will show them a certificate. Don't dare to deduct TDS. This certificate I have got directly from IT department. So this scheme is also applicable. But this is given under section 197. See, this is the housewife in my example. Look, continue my example. What housewife will do? She will fill form 13 and give it to assessing officer. And assessing officer will call in office also. He will not blindly believe you. Means housewife might be doing a fake claim also, na? So after housewife, in my example housewife, don't buy at housewife. After she fills form 13, AO might do inquiry. And then if convinced, he will give a certificate. And that certificate I will give to the payer. Payer means the one who gives me commission. So whenever any estate agency deal happens, I will show that certificate to the payer and they will not deduct TDS. And this certificate is valid for years and years until AO cancels. See, 15G you have to do every year, repeatedly. Because 15G form, it is not income tax certificate. Tell me 15G who gives to whom? I will give to the company giving dividend, or I will give to the mutual fund giving me income. Here IT department has not issued a certificate, na? So this you have to submit every year. But here I am getting a certificate directly from assessing officer. And income tax department gives me certificate. It has a validity for 4-5 years also. Actually, how long the certificate is valid? AO will certify. AO may write, I am giving you a certificate of no TDS for 5 years, 4 years, 6 years. Until the AO cancels the certificate, it's valid. Means this is a long-term arrangement, huh? But it is not simple. Huh? Why it's not simple? Convincing the AO that my status is so poor that my income does not cross basic exemption. So he should also be convinced. Huh? But assuming he is convinced, here you will get a certificate for a longer duration. Actually, the law does not specify how long the certificate is valid. It is until the AO cancels it. Okay. And under this section, you also have the facility of low TDS. Low means you can also request that instead of 10% TDS, I want 8% TDS, 7%, even that facility is available. Tell me, why would a person want a lower TDS? See, why a person wants no TDS, that I told you. That when you feel your income is not crossing the exemption limit, you want no TDS because your tax is 0. But sometimes your income might be crossing the basic exemption, but little bit only. What is the basic exemption limit? 2,50,000. But sometimes you feel your income is 2,70,000. Say 2,90,000 means it is crossing the basic exemption limit, means your tax is going to come, but not too much, little bit. So you might request that little bit tax I have to pay. But these people are deducting so much of TDS. Please do something that they deduct less TDS. Even this facility is available. See, when you have to communicate with assessing officer is a tax expert. He will understand all the intricacies of taxation. So if you tell him that I don't want TDS, he will say okay, no TDS. If you say I want TDS but little less, he will give okay for that also. But it is not that simple. Let me remind you, it takes a lot of pain to get certificate from AO. But once you get the certificate, no tension of TDS. Either your TDS will become no or it will become low. And this scheme can be used for any income. Above scheme was only for dream. This is for any income. Means this is universal. And see, this system has to be kept, na? See, basically 15G was meant for what? Housewife type people, senior citizen. And for them, a simple method is kept. Tell me why 15G I am calling it as a simple method. In 15G, you don't have to plead assessing officer, na? In 15G, you just have to fill the form and give. Your TDS will automatically stop. No inquiry, no questioning. It is simple. And dream income deserves simple method because they are genuinely the popular income in the life of housewife and senior citizen type people. So for them, government said, let's keep a simple method. Otherwise, see, if this method was kept for every income, so imagine a senior citizen housewife, even for dream type income, they will have to follow up assessing officer. It will be a trouble for them, na? So that's why for certain income, which government believes, yes, dream incomes are very common in the life of housewife and senior citizen. So let's keep a simple method for that. Especially these are small individuals that you have, let's not trouble them. But at the same time, one method was needed which will cover all incomes. So that no one can say that unnecessary TDS, why government has started. Like see, this method can also be availed by a company, this second method. See, this is for all assessees. Like many times, company is in continuous losses. Imagine I'm Reliance, L&T, Infosys. Continuously every year I'm suffering losses. So tell me, a loss-making company, anything they get from CD, Vakraf, CP, TDS will hurt. Because loss-making company, the tax is always 0. So TDS will always bother you. So what will they do? They will approach assessing officer. Company I am saying, all means companies can also avail the advantage. Above method is only for individual HUF. One more thing, even for dream income, you can use this second method. So tell me, if your client says, I have dream income, imagine you are a chartered accountant and your client says, I have dream income, I want to follow this method. So what will you say? Are you mad? Why you want to go for long cut? Since your income is of dream type, you can use this simple method. The second method is horrible, na? But still for dream, people go for this method. If they want low TDS. See, 15G can stop the TDS. It cannot lower the TDS. It simply stops. Because in 15G, there is no facility of low TDS. Because 15G you are giving to whom? Like if I am getting income from mutual fund, I am giving to mutual fund. And I cannot convince mutual fund that you deduct but little less. Mutual fund people, they are not tax experts, na? In dream income, you are communicating with whom? The payer of the income. So there you can submit form only if you want to stop the TDS. But if you want, no, I don't want to stop. I want TDS but little less. Then please go to assessing officer only. So in short, what I am trying to say, even for dream income, people approach AO if they want a lower TDS. See, best is, do distinction between, look here, distinction between, look. 197A, 197. Wait, how to remember the section, The section little tricky, it is confusing. See, right now it is fresh. Later on you will be meshed. What was 197 and what is 197A? So see one trick. This above method is general or specific? Dream is specific to dream, na. Below one is general, anything income in general. So do you agree the first method is specific? And because it is specific, there is an alphabet specific A. After 197, the alphabet A will remind you it is a specific section specifically for dream, only for individual HUF. But the second section is specific or general, universal. It is for all assessees, for any income. So general section will have plain 197. This way you to remember. Now tell me distinction. Look, 197A, 197. This is specific, this is general. This is for dream income, this is for all income. This is for individual HUF, this is for all assessee. Here TDS will stop. Here TDS will stop or it will be low also. No and low both facilities are available. Here you have to fill form 15G directly to the payer. Here first you have to give form 13 to AO. Then he will give a certificate. Then TDS will stop or it will lower. This you have to do every year. This you have to do not every year. Once you get a certificate, it is valid for a longer period until AO cancels it. So this distinction will give you clarity. Okay. So accordingly, whenever someone asks your advice, if he is saying, I want to stop TDS, if it is dream, suggest first method. But if someone says, no, I want to lower TDS, or even if he wants no TDS, but it is for non-dream incomes, then you have to suggest the second method. But see, second method is not applicable in some sections. This second method of convincing the assessing officer for stopping your TDS is not applicable in few sections. Why? You check the section, you will automatically come to know. See the exceptions. Exception means in this section, this method will not apply. Means you will not be allowed to stop or lower your TDS. Because what is 194B? Winnings. Under winnings, can anyone say stop my TDS? Why? Winnings don't even get basic exemption. See, the basis of stopping the TDS is what? My total income do not cross the basic exemption limit. But for people having winnings income, even if your winnings is 1000, tax will come. There is no basic exemption benefit for winnings. And in winnings, the TDS of 30% is the perfect rate. So winnings income, you can never request the AO for what? Stop my TDS, lower my TDS. TDS will come. Then 194 DA. See, all B's are winnings, na? Then what is next section? 194 DA. This is life insurance policy received on maturity. See, for life insurance, you are already having the facility of 15G. In dream, what was I? In dream, what was I? Interest income, insurance coming, insurance claim was there. But if someone say, but in dream only TDS can stop, na? I want low TDS. So in life insurance, low TDS is not possible. Why? Because in life insurance claim, TDS is accurately cut. 2% of the profit element. You forgot, na? Tell me, when LIC gives you claim on maturity, do they randomly cut TDS or exactly on the profit element? Profit element. Whatever amount you are going to receive on maturity, they subtract the premium paid by you. And it's already 2%. So can you expect that 2% should be made 1%? Means low TDS expectation is wrong. As if you say, stop my TDS, it's there in dream. The life insurance claim is there in dream. You know that? But if someone says dream is only stopping my TDS, I want low TDS, that's not possible. For life insurance policies, lower TDS not possible because already the rate is 2%. And that too on the profit element. So that TDS will remain intact. As we understand, for some people their income does not crossing basic exemption limit. If they want, your TDS can stop. But you fill form 15G, na? Why you want to come to this second method? See, I am convincing that under this section, why government is not allowing form 13 method. Form 13 method. What is IA? Purchase of immovable property. See, when I purchase immovable property, purchaser will not request for no TDS. Seller will request. See, are you noticing? These two sections are for the receiver. See here. Receiver has to fill form 15G. Receiver has to fill form 13. Receiver. So tell me, in 194 IEA, who is the receiver of the income? Seller of the property. Buyer will deduct TDS, but seller of the property is the person making the income. And if seller says, please stop my TDS, why? You sold a property for 50 lakhs or more. Definitely you made a gain. So why you want to stop? And if you say, no, reduce the TDS, why? It's already 1%. So in short, under 194 IA also, government is not ready to listen. What? No TDS, no low TDS. TDS will come. IB, in every section, think about a receiver. In IB, all individual HF are paying the rent, but they are the payer. Receiver is the landlord. And if landlord says, stop my TDS, why? Every month you are getting more than 50,000. Why you want to stop the TDS? And that is immovable property. So TDS will not stop and it will not even reduce because it's already 2%. See, IB also government is not ready to cooperate. See, these are sections where government says, sorry, don't come with form number 13 application. In form 13, what application do? Please stop my TDS, please reduce my TDS. This application will not be entertained in these sections. Then 194N, cash withdrawal. Now for cash withdrawal, if someone is requesting, please stop my TDS. Not at all. TDS on cash withdrawal is to discourage circulation of cash in the economy. That we can never stop. That we want to keep to discourage cash flow in the economy. Then what was P? Pension. See, pensioner 75 years or more, his TDS is accurately calculated. So if his tax is not applicable, bank will not deduct only, na? Remember, for pensioner, the bank where my pension is deposited, they calculate TDS and they will calculate accurately. If TDS is not there, they will not even cut, na? So 194P is also not allowed here. Then R, perquisite. See, TDS on perquisite is kept. Why? Because people hide perquisite income. Remember, I gave you one example that my student gives me a gold chain when he becomes a chartered accountant. So generally, what tendency I will have? Fees from the student I will show. But gold chain, if a student is given to me, I will hide. So these things are hidden. And for hidden thing, if government stops the perquisite, so what is the purpose? The purpose of 194R is what? People hiding perquisite type income, we want to catch it. So that's why government started TDS. So that thing which started can never stop. Then 194S, cryptocurrencies. Cryptocurrencies also unregulated market. So here also government is not ready to stop your TDS. In short, see, there are few exceptions, except that for every income, even non-residents, although I told you NR, TDS is under different section, but even if an NR wants please stop my TDS, please lower my TDS. He can also use this form 13. This is universal thing. All means resident, non-resident, everyone can avail this second method except this section. You know how to remember these sections by heart? See how I remember. Bada IA, Bada IB and PRS. Tell me, in Hindi, when we write capital B, what we say? Bada, Bada, okay? Or see, tell me, this is capital IA, na? So capital IA in Hindi, what we say? Bada IA. In proper sophisticated English, we say small case letter, capital letters. That is sophisticated. But informally in Hindi, what we say? This IA, when it is written in capital, we say Bada IA. So see how to read. Just remember IA and IB and then say Bada IA, Bada IB. And you know, this reminds you of what Bada means. Ba, Da. Ba will include all B's. Da is DA. See this list. See in this exception, all B's are there. After that DA and then capital IA, capital IB. So how do you read capital IA, capital IB in Hindi? Bada IA, Bada IB. So Bada will remind you of what? B's and DA. So Bada IA, Bada IB and has a sound of N. PRS. This way, if you remember, you will not forget the exceptions, okay? Bada IA, Bada IB and PRS. So this was 197A and 197. See, we are doing general notes. Huh? In general notes, there are 12 points. 6 we have done. 7th one is simple. This actually I already have taught. What does this point say? That if the other party does not give his PAN, I will deduct TDS at 20%. 20%. But yes, 20% is minimum. If the TDS is 30%, then 30. Like in winnings, TDS is 30, then 30%. But minimum 20%. Minimum is minimum. If the TDS rate is higher, then higher only, no? But see, this 20% is 5% under 194 O and Q. Means under 194 O and Q, if the receiver does not give his PAN, then don't deduct 20%. It will be too much. Because the main rate of O and Q is 0.1. So you cannot suddenly make 0.1 to 20, na? It will be a drastic rise. You know under O and Q what is the rate? What is O? My example, Shirishwa's website, online say no IDT teacher, and when I settle the amount with IDT teacher, I will deduct 0.1. And if IDT teacher does not furnish his PAN, I cannot make it 20, na? So it will be 5%. Means punishment of not giving PAN will not be 20 under O and Q. It will be 5%. What was Q? Purchase of goods. From single person I am buying goods more than 50 lakhs. My turnover in the last year is more than 10 crores. Here TDS is already 0.1. So 0.1 cannot become 20. It will be 5%. So this is point number 7. And this rule of extended TDS is given in 206AA. Okay. Then point number 8. This point is very important. Point number 8. After point number 8, all other points are small, simple points. Almost I can say topic is over only. This 8th point is the main thing remaining. Okay. Okay, then see. Section 40A. This section is from PGBP. You remember in PGBP I told you that if some expenditure is subject to TDS and if you don't deduct TDS, then 30% of the expenditure will become disallowed. 70% will be allowed. And if you are dealing with a non-resident, 100% disallowed. This point you remember? But see, this point when I explained in PGBP, I just explained it from the surface level. Now I will explain in depth. Okay. Now see, if you want any expenditure to be allowed in PGBP, If you want any expenditure to be allowed in PGBP, there are two conditions. Deduct the TDS latest by 31st March. Latest by 31st March, you make sure that you deduct the TDS. Deduct means create the liability of TDS payable in the book latest by March. Actually, you know, when you have to deduct TDS, when party's account is created, actual payment which is earlier, that might happen during the year also. But government says it's okay. Even if you deduct the TDS up to March of the financial year, plus after that if you deposit it up to the due date of filing the return, expenditure will become allowed. See, this is in PGBP. Huh? See, from TDS point of view, the law is so strict. When to deduct TDS? Party's account credited, actual payment which is earlier. So tell me, if party's account is credited on 9th May, so I should deduct TDS on 9th May. Or sometimes payment becomes early, say 14th April. So 14th April. So actual TDS law is very strict that you have to deduct the TDS at a perfect time. What time? Party's account credited, actual payment which is earlier. But in the chapter of PGBP, the law is liberal. What law says? Even if you didn't create TDS liability provision in the books at the time when party's account was credited or actual payment, it's okay. But at least by the end of the year, you make TDS provision. Because see, when we see your final accounts, at the end we should be able to see that is TDS payable in the books. That shows your intentions are good. Although you should have created a liability at a perfect time of party's account credited, but it's okay. Even if by 31st March in the books there is a liability of TDS, we are happy. But then that TDS payable liability you have to discharge by due date of filing return. Here also law is lenient. Actually, TDS liability you have to discharge by 7th of next month. But here government says it's okay. Anyways, we are talking about PGBP, na? And PGBP filing of return happens on July, October. So even by July or October, if you deposit the TDS, it's okay. See, basically what I am trying to stress, you know, in PGBP, law is lenient in the matter of TDS. Law is not saying it's okay, ignore TDS. Law is not like that. Law is strict in TDS, but not that strict. So tell me, what is the leniency in PGBP? Two leniencies. In the matter of deducting, in the matter of depositing. What is the leniency? In the matter of deducting, you don't have to worry that you have to deduct at the time when party's account credited or actual payment. Even if you deduct up to what? 31st March, it's allowed. That means, see, like in my rent example, if you remember, rent account debit to party account. Every month rent I was doing what? You rent to party. Is I was never creating TDS liability. It's okay. Even at the end of the year, if you book a liability of TDS, government is happy. And then when you have to deposit, no need to deposit by 7th. Deposit up to the due date of filing the return. If you satisfy these two conditions, your PGBP will be secured. Expenditure will be allowed. Now see, one by one. Assume, wait up. See, this tick mark means what? Can you see tick mark? By 31st March, I deducted the TDS. Plus, what is the second condition? Deposit up to due date. That also is satisfied. So, if you satisfy both the condition, both the ticks, so expenditure will become allowed in previous year 25-26. Assume our previous year is, assume what? In our exam, what is the previous year? 25-26. So, if you see this knowledge you have to use in PGBP, huh? Timing of teaching you is TDS, but actually this is knowledge of PGBP. So, imagine you are solving PGBP sum, and if in the question they say by March TDS was deducted and it was deposited by due date of filing the return. So, you remember in PGBP you used to put tick mark, cross mark, tick mark, cross mark. So, what will you do for such item? Tick mark, allowed. Okay. Now try this. See, I will discuss 1, 2, 3, 4 cases. And trust me, fourth case will be most important. But I cannot jump to 4. Step by step. Case 1 is simple. Try second case. Second case, by 31st March you deducted the TDS. Means what? In the books there is appearing TDS payable provision. But you didn't deposit by the due date of filing the return. So what will happen? Government is not happy. So see what will happen. 30% will be disallowed in previous year 25-26, and if you have dealt with NR, 100% disallowed. But this is disallowed now. In future, when you actually deposit the TDS, it will become allowed. See, what was the mistake here? You didn't deposit up to the due date of filing the return, na? But afterwards you will deposit. So when you deposit in that financial year, this disallowed thing will become allowed. So see what I have written here. 30%, 100% which is disallowed now, it will become allowed. But when? In the year of deposit of TDS. So answer, this TDS which I didn't deposit now up to the due date, I deposited in say 9th May 27. I deposited TDS in 9th May 27. So tell me, first effect in 25-26 what will happen? In the return of 25-26, 30% disallowed. Assume 30%. Huh? In the return of 25-26, 30% disallowed. But I deposited in 9th May 27. So 9th May 27 is which financial year? 27-28. So when I file the return of 27-28, same 30% will become allowed. But in that year, I will show unrecorded business expense. You forgot the format of PGBP. You know in PGBP what was the format of computation? What was the format of computation in PGBP? See this. Net profit as per. See this. Net profit as per P&L account. Add a disallowed expense, less non-business income, less unrecorded business expense, add unrecorded business income. So basically, you know what I want to know, give me the effect in this format. Huh? So once again, I will ask you the question. Keep this format in mind. See, answer this. If TDS is not deposited up to the due date of filing return, and if it is deposited on 9th May 27, tell me the effect in all years. First in 25-26, what will happen? 30% will be disallowed. And what will you do with disallowed item? You will show here, add disallowed expense. 30% will be disallowed. This you know now. Then what did I say? This was not deposited now, na? It was deposited on 9th May 27. So tell me 9th May 27 means financial year 27-28. That year this expenditure will become old. So will this expenditure come in that year's P&L? See, this is current expense. You defaulted in TDS, but you rectified that in 27-28. So in 27-28, the effect will come in unrecorded business expense. Because when you see profit and loss account of 27-28, so 27-28 profit and loss account, it will be unrecorded item. Because in 27-28, you have deposited TDS of some old year. And in our final accounts, old expense do not come, na? So that's why it will come in unrecorded. You know why I'm stressing on this? This point recently came in CA Inter paper. In CA Inter paper, you know what they said? Somewhere in the past, we failed to deduct TDS, deposit TDS. So that was some past. So in past, it became disallowed. In past, it became disallowed. And then you know what they said? Now in the current year, we deposited the TDS. But we deposited for some old year, na? So old year expense will be unrecorded. You have to show in unrecorded business expense. You know why I'm taking this point in detail? Because this point they tested in CA Inter. And I'm sure even if it comes in CA finance, students will not be able to figure out. So see, conclusion is what? Read this sentence. 30%, 100% will be allowed in the year of deposit, but where you will show the effect of allowed? UBE, unrecorded business expense, because this allowing is happening in future. In future, this current expense will become old. And in future P&L, old expense are not recorded. Unrecorded effect will come. And in current P&L, it will become disallowed. In future, it will come in unrecorded business expense. See, basically, you know what is going in my mind? I want to show the effect in the sum. Because see, this knowledge why I am giving, so that in our exam, first question comes on PGBP, you should be able to solve the sum. So if you just know the theory, but if you don't know how to apply, what is the use? No? Okay, now try this case. See, in the second case, TDS was deducted. You didn't deposit up to the due date. Now imagine TDS by 31st March, it was not deducted only. Tell me, not deducted means what? Deduct TDS means to create liability in the books. You didn't create the liability in the books. Means, can you imagine how the entry was? Assume the transaction was of advertisement. And you know what entry I passed? Advertisement account debit to parties account. Full 100 rupees, full 100. See, TDS is missing. Ideally, what should be the entry for advertisement? Advertisement TDS is there, 194C ABC JAL works contract. So ideally, what should be the entry? Advertisement account debit to parties account and to TDS payable, either 1% or 2%. If the advertiser is individual HF 1%, other is 2%. That should be the entry, but I didn't show TDS payable. And 31st March is also gone. So that means TDS is not deducted, but the party is outstanding. What was the entry I passed? Advertisement account debit to parties account. Party was outstanding. So tell me, current year what will happen now? Current year I will have to suffer disallowance because I have to deduct as well as deposit. I didn't even deduct. So depositing is immaterial. And this is immaterial for me because by 31st March, I didn't create TDS provision in my books. So it will become disallowed. But it will become allowed in future. How it will become allowed? Tell me, how will you correct your mistake? What was the mistake? Advertisement debit to parties account 100. This was the entry in the current year. So current year I suffered the disallowance because I was blamed for TDS not deducted. But in future, what I can do? I will reverse the party by debiting it. Let's assume TDS is 1%. What entry I should pass in future? Parties account debit 1 to TDS payable. Accounts you know, na? So in future what I should do? Parties account debit 1 to TDS payable 1, and then I have to deposit that. And whenever I deposit in that year, it will allowed UBE. What is UBE? Unrecorded business expense. So see, it will become allowed. But in which year? The year when TDS is deposited. But you know, this is if the party is outstanding. Now, can you imagine this situation? TDS not deducted and party paid off. I will pass the entry. Advertisement account debit 100 to bank account 100. Look at this entry, look. This is a serious problem now. First, what mistake can you see? I should have written to TDS payable. See, do you understand? Na? On advertisement, there is TDS works contract 1%, 2%, receiver individual HF depending upon that. Depending upon that. So, what mistake I did? I forgot TDS payable. In fact, I paid full 100 to the advertiser. keep the money. I didn't deduct TDS. Transaction happened on 3rd June. Means till 31st March, there was nothing like TDS payable. And how will I cut? I gave the money only to the advertiser. See, I have to cut from that amount, but that amount is given away. See, here at least the party was outstanding. Means I didn't give the money yet. So I can rectify. What I will do? In future, whenever I will give him 99, 1% TDS. And 1 I will give to government. See, as long as the money is with me, I don't have to worry. Let it be disallowed now. At least in future, when I make sure that TDS is cut and deposited, this will become allowed. But what if I make the full payment? The party is paid. So in current year, it will be definitely disallowed. See what I written, disallowed. But then, how to get it allowed in future? If the party was not paid, so in future I can rectify. I will say, okay, I have not yet paid the party. I will pay net amount only and I will give government the TDS amount. So in that year, at least I will get the deduction. But if I have paid the party, see, imagine I have given full 100 to the party. Now, how will I manage TDS? So don't give me informal methods. There are informal method. Means what? You can tell the party, give my money back, I will redo the transaction. See, there are many informal methods. And you can say, treat this as a net amount. Means advertiser will do the adjustment of the balance amount. We will treat this as a net amount and I will show TDS. I can do, manipulation is possible. But please don't go on lines of manipulation. Imagine in scrutiny, government notice this. You paid full amount to the advertiser. Where is the TDS? So current year it will be disallowed. But then in future what will happen? Getting it allowed in the future is not possible. No? Because at my end, depositing TDS is not possible. See, up till now in all cases what has happened? In future when I deposit TDS, it gets allowed. But here how will I deposit TDS? So see, there is one method here, official method given by law. Look, I will tell my advertiser, see advertiser, by mistake I made full 100 rupees paid payment to you. Now please show this advertisement in your returns as your income. See, for me advertisement is an expenditure, but for him it is an income. So condition 1, I will request him, please show this 100 as your income in your returns. Please pay tax on that. Please file the return. 3 things I will request. Tell me which 3 things. Show advertisement as your income in your return. Show, pay tax on this advertisement because I haven't deducted TDS. And please file the return also. Please, I will request that. Okay. And then my chartered accountant will come and see whether advertiser has done all this thing or not. He will give a certificate. Yes, advertiser has done everything. This is 4th condition, CS certificate. If I satisfy everything, my expenditure will become allowed. Not now. In current year, I will have to face disallowance. But in future, whenever that advertiser files the return, it will become allowed for me in future. See, I am worried about 30% expenditure which is disallowed now. At least in future I will get the deduction. But future means when? When my advertiser files his return. Return of which year? 25-26 only. The transaction is of advertisement 25-26. It is expenditure for me in 25-26. Same thing is income for him. And when will he file his return of 25-26? Somewhere here. But that is the next financial year. So next financial year I will get deduction. Means my 25-26 will go disallowed. But after 25-26, next is what? 26-27. It will become allowed. Actually, law doesn't say 26-27. Law says whenever advertiser files the return. What if he files updated return at a later date? So that year. Updated return can be filed anytime. So whenever he files the return, this thing which is disallowed now, it will become allowed. Here written here, read. 30% or 100% will become allowed in which year? Year in which receiver files the return. See here, are you understanding why so much of tantrums? Because I made the mistake of making the full payment. See, if this payment was not made, tell me, if it was outstanding, say party's account, if it was outstanding, the money is with me only, na? See, in any case, my current year is spoiled because I have not deducted TDS. But at least if the money is with me, I can give net amount to him and pay the TDS to the government. So at least there is a scope that it can be allowed in future. But if I give away the full amount to the advertiser, so nothing is with me. If someone, sir, we can pay from our pocket, na. See, I don't want informal methods. There are some manipulative informal methods. People manage also. But right now I am teaching you law. And law will go in a proper legal manner. So what is the legal method of rectifying this? So see, best is imagine if your client has done this mistake. What will you suggest your client? You paid full amount, you are mad. Now what will you advise him? Tell the other party to show this as his income, show in income, pay the tax, file the return, and chartered accountant will certify that all this work is done by the other party. And then what will happen? Current year nothing, current year it will be disallowed. But whenever the other party files the return, it will become allowed. But in future when it becomes allowed, it will be allowed where? See, whenever TDS mistakes gets allowed in future, it will be allowed in unrecorded business expense. Because in current year you are showing in disallowed. But if that gets allowed in future, it will be allowed under unrecorded business expense. So this last case was very important. Okay. Because this is the case where the depositing TDS at my end is not possible. Okay, see, in this case, can you calculate the interest? Interest. Interest for what? Late deduction or late deposit? See, late deposit comes when you're deducted and the money is with me, you're dealing in depositing. Here I am not deducted only. So there will be interest of late deduction, 1%. See, 1.5 comes when you're deducted and kept the money in your pocket. You're not depositing only. But here I didn't deduct only, na. So interest of 1% will come. Calculate. How we will calculate interest? See, what is the formula for late deduction? Amount of TDS, let's assume rupee 1. On 100 rupees, 1% I am calculating 1. Into 1% per month is the rate for late deduction. And what was the rule for the period? Date when it was deductible up to the date when deducted. You don't remember this point? Here I had explained, see this in last lecture. Date when deductible up to the date when deducted. So use this formula here. What is deductible date and what is deducted date? When TDS is deductible, party's account credited, actual payment which is earlier. So actual payment happened on 3rd June. So it was deductible on 3rd June. But when it is deducted, deducting is not happening only because I have paid. You didn't understand why I am asking this question, because it is interesting. In the act they have written date when deductible up to the date when deducted. How will you get this date? Date when deductible is 3rd June. TDS was deductible on 3rd June. But what is the date when TDS is deducted? So deducting is not possible only. I have given away the money. So when the other party files the return, TDS is deemed to be deducted. Means, see, my advertiser has taken away the full money from me. Now, when he files the return, the transaction was on 25-26. So when he files the return on 25, 26, someday he will file the return. So whenever he files the return, that day will be date when TDS is deemed to be deducted. In the act they have written deemed to be deducted. Because actual TDS deduction is not possible because I have given away the money. See, I have written here, look, from 3rd June to assume 29 July is the date when other party filed the return. 29 July I am randomly taking, assume that my advertiser filed his return on, see normally people file return in July, na? So accordingly I have kept a date that 25, 26 return he filed on 29 July. So filing of return date is the end point of interest. So from year to year interest will come. Even this is given in the act. Huh? You know, this last case is explained in detail in the act. First in the act they said since you paid away the amount, deducting TDS at your end is not possible. So you suffer disallowance now. But don't worry, if you fulfill some condition, it will become allowed in future. And for such cases, interest will be calculated like this. So this was deep diving into 40A. 40A, okay. See, this allowed and disallowed was from which chapter angle? PGBP angle, okay. Then, you know, when you calculate TDS, in the percentage of TDS, whether 10% or sometimes TDS is 2%, sometimes 0.1%, we never take surcharge and health and education cess into account. Because TDS percentages are ad hoc percentage. So anyways, TDS is not the real tax rate. It is ad hoc. So we ignore surcharge and cess. But if TDS is deducted as per the actual rate, then you have to consider surcharge and cess also. And you know, in salary, in winnings, in 194P pension, and when you are dealing with NR, you deduct TDS according to the real tax rates. And when you deduct TDS according to the real tax rates, surcharge is also taken into account. See, for example, look here. Read this. If TDS is according to ad hoc percentage, ad hoc means random 10%, 1%, 2%, then ignore surcharge and cess. But if TDS is according to actual rate, consider surcharge as well as health and education cess. You just have to remember when TDS comes at actual rate. See this. In salary, we deduct TDS according to slab rates, and slab rates is the real tax rate. Even 194P pension, TDS is according to slab rates. You know, 75 years or more pensioner. Winnings TDS is also according to 30%, which is the actual tax rate. Or NR, for NR I already told you, NR TDS is under different section. But I told you in advance that for NR TDS is always deducted at actual rates. And if TDS comes at actual rate, consider surcharge and cess. See, for example, try this. Try this example. This is Shirish Vyas. He has paid rent of 40 lakhs to a foreign company. So tell me, for rent, will you say section 194I or 194IB? Don't even dare to say this section, because these are from the family of CD Wakraf CP. CD Wakraf CP family receiver should be resident. Here, who is the receiver? Non-resident foreign company. And whenever foreign company non-resident are the receiver, TDS will come, but under different section. You forgot this theory. Whenever non-resident foreign company, TDS comes under different section, and here TDS is at actual rate. And when TDS is at actual rate, you have to consider surcharge and cess. So do one thing, calculate TDS on this. Calculate. I hope you are not using the knowledge of that 190 for IE and IB. That is for resident people. Your rent receiver is a non-resident. You know, in Hindi there is one dialogue which I use. NR जिस रेट से टैक्सा जाएगा उसी रेट से काटा जाएगा. Taxing rate is the TDS rate. So what is the taxing rate for a foreign company? Foreign company tax rate you don't know, 35%. So TDS will also be 35%. This is called TDS at actual rate. But TDS at actual rate means consider surcharge also. So tell me, how will you calculate TDS? Firstly, it will be under section 195 because NR. Calculate TDS. 35% plus surcharge will also come. But you know what is the rule for surcharge of a foreign company? More than 1 crore 2%, more than 10 crores 5%. Remember in companies surcharge I told you 7 12 2 5, 7 12 2 5. 7 and 12 is for Indian company, foreign company surcharge is 2%, 5%. But you know that depends upon total income. But will I know the total income of the foreign company? I am having a rent transaction. So actually surcharge depends upon total 5 heads of income. But I don't know the total 5 heads of that foreign company because my relation is of rent. So I will see the size of the rent. What is the size of the rent? 40 lakhs. It doesn't cross 1 CR. Ignore surcharge. Because rent not crossing 1 crore. See, you didn't notice one thing. Actually surcharge depends upon total income. But I am not expected to know the total income of the foreign company. Na? I will see the size of the rent. So what is the size of the rent? Less than 1 crore. That's why surcharge is nil. But health and education cess will always come. So in 35%, if you add 4%, this is the amount of TDS. Basically what I am trying to show, sometimes you have to respect surcharge and cess also to determine the rate of TDS. But that is when only when the TDS is at actual rate. And when TDS is at actual rate, non-residents, winnings, pension, salary. So whenever in the question the TDS is of salary, pension, winnings, NR, you will consider surcharge and cess. Okay. Yeah, so your TDS will be 40 lakhs into 36.4%. What will be the TDS here finally? 40 lakhs rent I was supposed to pay. But I will tell foreign company, I will not give 40 lakhs. 40 lakhs is the gross rent. After TDS, I will minus 36.4% of 40 lakhs. So huge TDS will be deducted. This is what happens when you deal with NR. So see, NR, we can't expect that he will pay the tax later. We want to settle the full tax at TDS level only. So TDS only should be such that full tax liability is discharged. Yes, if NR feels so much of TDS you are deducting, you can apply for low TDS. Form number 13. I told you today, na, that if someone has a complaint of so much TDS, you can use section 197. So like see, this foreign company might say, that you can see so much of rent, we have got so many expenses, we have got so many losses, and too much of TDS you are deducting. So if this foreign company has a problem, he will approach assessing officer and request for lower TDS. And if he gets a certificate, then I will cut less TDS. But otherwise, I will be so stubborn that I am going to deduct 36.4% TDS. Okay. You know this 197 which I said, under this section, major crowd is of NRs only. Means if you visit assessing officer's cabin, you will find mostly NRs are sitting there requesting for no TDS, low TDS, because NR TDS is horrible. See, for resident people, TDS is hardly what? 5, 10, 2%, 1%. But non-resident TDS is at full-fledged rate. And sometimes non-residents say we are running into losses or whatever they might complain. So mostly in assessing officer's cabin, you will find a crowd of non-resident requesting for lower TDS. And if they get the certificate, they can give it to me, then I will deduct less TDS. So this was point number 9. Then 10th point I have already explained. That whenever you receive some income net of TDS, in the 5 heads you will show net or gross. Gross. This rule is written in section 198. Receiver of the income has to show gross amount. Like see, if I get dividend from some company net of TDS, so where will I show dividend income? Income from other sources. but I will show net or gross. Gross. This rule is made by 198. And the TDS which is deducted, I will get the credit of that. That is written in 199. That you will get the credit. But you know when you get the credit? At this stage you get the credit. After health and education says whatever is the amount, you can say this much amount is already deducted, so I will pay less. Okay. Yes, companies will claim the credit at this stage, because companies' final tax liability is what? Normal and MAT, whichever is higher. So after this, whichever is higher, they will claim the credit of what is already deducted at source. Whatever, section 199 says that don't worry about the TDS which is deducted, you will get the credit, that much less you will have to pay. So this point everyone knows. Only thing is, what is the section we came to know now? Section 198, 199. Then next point is simple. Every payer has to issue TDS certificate to the receiver. Like see, whenever I make payment after cutting the TDS, I am supposed to issue a certificate. Certificate is a proof that I have deducted your TDS and deposited. That proof I have to give in the form of TDS certificate. And what is the form? For salary, TDS certificate is form 16. And for all other items in CD Vagraf CP, it is 16A. But special forms for 4 sections. Means if you deduct TDS under 194A, who deducts under 194A? Buyer of the property. He will issue form 16B. Who will issue to whom? Buyer will issue to the seller. Under 194 IB, the rent payer has to issue certificate to the landlord. 194M, works contract, professional service. When you make the payment, you will deduct TDS and you will give certificate in form 16D. And what is 194S? Asterisk mark. See, I have made an asterisk mark to show if small individual HF buys cryptocurrency, he will deduct TDS and he will issue certificate in form 16E. See this form number, they will never test in exam. Just for knowledge I have said. You just remember like this, that whenever you deduct TDS and you deposit, you have to issue certificate to the other party, TDS certificate. Then, last point, every tax deductor should have TAN number. Tax, deduction and collection account number. Every tax deductor. Deductor means, in my language I say payer. In my language I say payer. Payer, when he makes payment, see, he makes the payment net of TDS. So the person who deducts the TDS, he should have a TAN number. Tell me, what is the difference between TAN and PAN? PAN is the identity of person earning the income. PAN. TAN is the identity of the person deducting TDS. See, this TAN number and PAN number is identification number. Like see, government wants to know that in India, who are deducting TDS. So every tax deductor should have TAN. But you know, applying for TAN is also work. So that's why this work, you are exempted if you are under 194 IA, IB, M, NS. See, if you have to deduct TDS under 194 IA, in short, if you become tax deductor under IA, IB, M, and S asterisk means small individual HO buying cryptocurrency, then no need to apply for TAN. Directly you deduct the TDS. Tell me, what are the special reliefs under these 4 sections? Tell me why these 4 sections always come in a group. Because under these 4 sections, government is feeling guilty of keeping TDS compliance. So what relief government has given? Relief number 1, whenever you deduct TDS under IA, IB, M and S, no need to have TAN. Without TAN, government will identify you. So one work is reduced. And when you deposit TDS, don't worry about 7th. It's always 30th of next month. And then when you deposit TDS by 30th of next month, you have to deposit online. And when you deposit online, there is a challan. That challan becomes challan cum return. No need to separately file quarterly returns. These are the relief points under 190 for IA, IB, M and S. See, S is enjoying the relief when when the purchaser of cryptocurrency is individual HUF, small individual HUF. Otherwise, cryptocurrency if purchased by big people, they are not covered in this special relief. So this was a 12th point of generally you should have TAN, but under these sections TAN is not required. So this completes the theory of TDS. Now, questions of TDS, see what is left. What is left in TDS? Till question 6 all are done. Till question 6 all are done. In question 6, 2 points are remaining. Question 7 is remaining. Question 8 is also remaining. And after that 9. So see, whatever remaining questions are there, they pertain to TCS. Only one question of TDS is left that you can do in homework. So in short, TDS is ending here. Revise and come, please revise and come.